On Tuesday, October 22nd, the IRS released the brand new inflation-adjusted tax brackets for the tax year 2025. Tax brackets heavily impact every single taxpayer, and they have a dramatic impact on your overall tax burden. I am Karlton Dennis, a licensed enrolled agent and the founder and CEO of tax strategy firm Tax Alchemy. Today, I'm going to break down exactly what the new tax brackets are and tell you everything that you need to know about how they will impact you. So without further ado, let's dive in. All right, guys, annual income thresholds for the 2025 tax brackets are only increasing by about 2.8% from their 2024 amounts. This represents one of the smallest tax bracket increases in recent years, and it's due to the cooling down of inflation. So let's start with single filers. Here are the new tax brackets for single filers for 2025. If your income is $11,925 or less, you fall into the 10% tax bracket. If your income is $11,926, upwards to $48,475, you're now in the 12% tax bracket. If your income is between $48,476 all the way up to $103,350, the income that's in this bracket will be taxed at 22%. And if you have income from $103,351 to $197,300, your income would be taxed at the 24% tax bracket. And if your income falls between $197,301 upwards to $250,525, you will be in the 32% tax bracket. And if your income falls between $250,000 all the way up to $626,350, you will be in the 35% bracket. And last but not least, the 37% tax bracket. If your income falls above $626,351, you will be in the 37% tax bracket. So really, if you're a single filer, the only way you're paying the top tax brackets, 37%, is if you're making over $626,351, just to put things into perspective. Now we're going to talk about joint filers. So if you're married filing jointly, here are the new tax brackets for joint filers for 2025. If your taxable income is $23,850 or less, you will fall into the 10% tax bracket. If your income is $23,851 up to $96,950, you will fall into the 12% tax bracket. If your income is over that, $96,951 to $206,700, you'll fall into the 22% tax bracket. And if your income is above $206,700, which means it's $206,701, all the way up to $394,600, as a married couple, you will fall into the 24% tax bracket. And if your income is $394,601, all the way up to $501,050, you will be in the 32% tax bracket. And if your income is $501,051, all the way up to $751,600, you're officially in the 35% tax bracket. And last but not least, if your income is above $751,601, finally, you will fall into the 37% tax bracket. So as you guys can see, these tax brackets have been expanded. If you're somebody that's married filing joint, you won't cross over into the 37% tax bracket unless your income is above $751,600. Now, what we're going to do is we're going to talk a little bit about head of household. In case you didn't know, what head of household means is somebody who does not qualify for the married filing joint status can qualify for head of household if they have a qualifying dependent. If you have income under $17,000 as a head of household, you will fall into the 10% tax bracket. If your income is above $17,000 up to $64,850, you will fall into the 12% tax bracket. If your income is over $64,850 all the way to $103,350, you will fall into the 22% tax bracket. And if your income is over $103,350 up to $197,300, you will fall into the 24% bracket. Your income that's in $197,300 up to $250,500 will be taxed at the 32% tax bracket. Your income at $250,500 up to $626,350 will be taxed at the 35% tax bracket, and any amount of income that you make over $626,350 will be taxed at the 37% tax bracket. These are the new tax brackets for 2025 that we have to wrap our head around. But that's not everything. Next is the standard deduction. In addition to the tax brackets, the IRS has also changed the standard deduction amounts. And if you're not familiar with the standard deduction, it's a dollar amount that the government allows people to take who do not itemize their deductions. You can subtract this amount from your taxable income. For the tax year 2025, the standard deduction will be $15,000 for single filers. This is up from $14,600 in 2024. For married filing joint couples, the standard deduction is rising from $29,200 to $30,000. And for head of household, the standard deduction is moving up from $21,900 all the way to $22,500 in 2025. So you might be asking, what exactly does this mean for me? Now that we've covered all of the changes that are occurring to the tax brackets and we covered the changes that are happening to the standard deduction amounts, I want to cover exactly what this means for you. Every single year, the IRS adjusts the tax brackets for inflation. You might have noticed that the prices of things like homes, food, energy, clothes, and vehicles tend to keep rising. And this is inflation at work. According to the Consumer Price Index, the inflation rate has hovered between 2 to 4% for most of 2024. However, many people would argue that the real inflation rate is a lot higher than that. The reason why the IRS adjusts the tax brackets for inflation every single year is because it's trying to keep things a little bit fair. It doesn't want taxpayers to be pushed into higher tax brackets just because of inflation occurring and the value of currency going down. So what this means for you is that you will now have to make more money in order to be placed into a higher tax bracket compared to 2024. This is a good thing because it means a lot of people who make the same amount of money, they actually will probably end up dropping out of a higher tax bracket into a lower tax rate because of these changes. The reason why this is fair from a tax perspective is because the same amount of money in 2025 will not buy you the same amount of goods and services that it did in 2024. So therefore, it makes sense that the tax brackets should be adjusted to new values of the currency in 2025. But make sure you book a free consultation by clicking the link in the description if you want to learn how to minimize your tax obligations in 2025 for these new tax brackets. If you're somebody that wants to save money, I would love for you to go ahead and schedule a call with our team so we can see what we can do to support you. But here's the bottom line for the 2025 tax adjustments. If we had 0% inflation, there would be no need to adjust the tax brackets. But because of the way that our fiat US dollar currency works, we tend to experience inflation every year. In America, as our supply of currency and circulation increases, we all know the government loves to print more money. The bottom line is that unless our monetary system changes dramatically, you should expect inflation to keep occurring every year. And you should expect the IRS to continue to make inflation adjustments to the tax brackets every year. It's a good thing that the IRS accounts for inflation when creating new tax brackets each year because it keeps the playing field fair. Guys, that's all I got for today's video. As always, don't forget to comment, don't forget to like. If you're not a subscriber, smash the subscribe button, and I will be providing you more tax tips as a tax expert, but I look forward to seeing you all on the next video. Cheers.